Dear Robert, what is selling short? Signed, Short but Proud.
Well, Proud, selling short is a tricky technique for sophisticated investors. It's a strange transaction because when you sell short, you only make money when the price of your stock goes down. That's right, down. Now, let me take you through this. What you do first is you call your broker. This guy over here is my broker. And I tell him that I want to sell stock short, and it can be any amount, it can be any stock, but of course we're going to call it 100 shares of the Stretch Rubber Band Company. Now, what is really strange about this selling short is that it seems to mean that I'm going to sell something that I own, but actually I'm going to sell stock that I don't actually own. What my broker does is he looks for one of his other clients to lend me the 100 shares of Stretch. So look around, see who, she, I assume, is willing to lend me 100 shares of Stretch Rubber, so she gives the shares to him. Now, when he gets the stock, he doesn't give it to me. Instead, go ahead and sell it on the exchange, exactly like any other stock transaction, and let us say that he gets, 20 bucks, 20 bucks a share, and that is $2,000 that is credited to my account. So now I sit here and I wait, I watch the market. What I am hoping for, you remember, is that Stretch Rubber Band will fall in price. And also remember that I still owe something to her. She's owed 100 shares of stock. Now let's say I get real lucky and after a couple of weeks, the price of Stretch falls to $10 a share, half what it used to be. At that point, gleefully, I call up my broker and I tell him now is the time to buy 100 shares of Stretch, now costing only $10 a share, or $1,000. So, I got $2,000 here, remember. Broker, go ahead and buy me 100 shares of Stretch Rubber. Oh, I got to give you the money, all right. But I only have to give you 1,000 now. Go ahead and buy it. Okay. He now has 100 shares of Stretch Rubber. This is called covering. He's going to return the shares to my original lender. She is now happy. She's got her shares back. This is selling short. Now watch what happened. I paid $1,000 for those shares, and there is now $1,000 left for me. Clear profit. But there are several buts that you must pay very close attention to when you sell short, because things do not always go quite as smoothly as you just observed. This is not a transaction to be taken lightly. Selling short is different from a normal stock transaction, and there are hidden dangers. Consider, suppose the transaction that I just showed you just a minute ago had gone very differently. I called up the broker, I sold the stock short, just like before he borrowed it, and sold it for 20 bucks a share. I still got my $2,000, but this time, as I sat and as I watched the market, the price of Stretch, instead of going down, went up. Say it went up to $30. I still have to replace the stock that I borrowed from her. Now, 100 shares of Stretch Rubber Band now costs, at 30 bucks a share, $3,000. I only have $2,000. In order to give her back her stock, I'm going to have to take the $2,000, reach into my pocket, and take out my own $1,000. I've just lost $1,000. Let me emphasize that selling short is not for everyone. If the stock had gone higher, I could have lost $2,000, $3,000, $4,000. Don't try it until you've had much more experience.
Dear Robert, what's an odd lot? Signed, Feeling Peculiar.
Well, peculiar, stocks usually trade in units called round lots, which is usually 100 shares at a time. Now, an odd lot, aside from being a collection of strange people, is the purchase or sale of anything less than 100 shares of stock. The Wall Street Journal and other papers publish odd lot statistics every day.
Dear Robert, what is par value? Is it something like golf? Signed, Bertie.
No, par value has nothing to do with golf. In fact, it doesn't have much to do with anything except technical accounting rules. When stock is first issued, the company is required legally to establish a par value for the stock. It is the face value of the stock. But essentially, it's a meaningless number. It bears no relation to the thing you care about, the market price of the stock, what it sells for. So, frankly, ignore par value. And in fact, forget you even asked.
Dear Robert, what's a proxy? And what's a proxy statement? Signed, Baffled.
Well, a proxy is a ballot. It allows you to vote on company issues. The company sends you a proxy statement, they call it, along with the actual proxies. The statement is the company's explanation of the issue you're supposed to vote on. Its recommendation on how you should vote is also included. Then you fill out the proxy and you sign it, and you're giving your authorization to vote your shares a certain way. And by the way, you don't have to vote their way.
Dear Robert, can I buy stock in foreign companies? Signed, over there.
Well, as a matter of fact, over there, you can. But to do it, you must have a broker that either has branches in other countries or works closely with foreign brokers. And it does cost a little more to buy foreign stock. You will be paying first for the commission of the broker on the foreign exchange, over there, and you will be paying for your own broker's commission. And then the stock price will also be affected by changes in the currency rates. Say, for example, you are buying on the Tokyo exchange. You're going to have to transfer your dollars into yen, because they don't take dollars over there. That's to buy the stock. Then when you sell the stock, you got to take the yen and turn it back into dollars. If the exchange rate goes against you, well, it can eat into your profit. But you can do it. And also, I want to thank you all so much for these cards and letters and for the holiday loaf from Des Moines. It was very nice. Yes, I know, Chet, but this is a special situation. I think that the secondary issues are starting to take off on the upside.
Right. But with a book value of more than $17 a share and a debt of only 20% of equity, Stretch has good downside protection. Now, the initial offering was a blowout, but there's been a lot of tailgating among the dealers, and the stock hasn't been affected by the correction.
But, Chet, I just don't think it's overbought. Now, a lot of speculators have been stopped out of a short position, and I'm convinced that we're ready for the second up leg on this market. And, Chet, I really believe that it isn't a cyclical market. It's secular, Chet. This stock is in a rising technical pattern, and it is attractive for commitment, I think.
Well, you could be right. But I think the market's a bit shaky near term. There's substantial potential for the intermediate term. The real key will be what triggers the next upside move.
Well, what do you think that will be?
Well, equities right now turn on interest rates. So the market over the near term will be affected by the success or failure of the Treasury's new offerings. After that, we should see this period of consolidation end.
Well, then what do I do?
I'd upgrade some of your holds to buy holds, some buys to sells, and make sure all your targets make sense.
Oh.